Welcome to Alga's Investment Podcast. And in this episode, we're going to talk about Bitcoin. And my guest today is somebody who I worked with for over 15 years. He's a very cynical investor and spends a lot of time on research. And in the last 10 years, he spent an awful lot of time looking at cryptocurrencies. So today, welcome, Peter Lawery. And before we start, I've got to say that there is nothing about today's conversation that is anything to do with giving any sort of financial advice from either of us, because this is an investment that some people would say simply should not register in people's portfolios.
Completely unregulated and very controversial. I think that's the way to put it. And I think we also add the caveat, we reserve the right to change our mind on anything we say.
Absolutely.
Yeah.
Well, okay. Pete, it's just great to have you back. 15 years. 15 was, it's actually, when was it? 2014 we last worked together.
We last worked, yeah. So it was actually 17 years, because I think 16 years, something like that. It was the late 90s we started working together. Yeah.
So just to give our listeners a taste of what we're going to be talking about today, I'm going to start off with a very simple question. What on earth is Bitcoin?
I'm glad you started with a simple question. I'll give you a simple answer. It's whatever you want it to be. It's a multi-use asset. Now, that comment we'll come back to. I think there's 13 separate uses for this, and I'm sure I haven't isolated all of them. The technical description, if you like, is it's 3,000 lines of code. It's an algorithm or a token attached to an algorithm. And that is where most of the confusion comes from. People cannot get their head around that. If you want a sort of a layman's term,
yes,
internet money.
Internet money.
Digital internet money.
Okay, and who invented it?
So, second good question. The reality is nobody knows. The name that's always in the frame is Satoshi Nakamoto, which is clearly pseudonymous. Who that person was, we don't know. That person or persons still owns 1 million Bitcoin, which have never been touched. And we can tell they've never been touched because Bitcoin is transparent. You can see all the transactions. It could be an organization. It could be an institution. I mean, the answer I always give to this, when investors say, I can't buy it, I don't know who created it, I always say, well, do you use a MasterCard? And can you tell me who created the MasterCard network? And of course, no one can tell you that.
Okay.
It's actually irrelevant, I think.
And when was it invented?
So the first declaration of this was the issuance of a white paper in 2009 by Satoshi Nakamoto. So that's the start date. So it's been going now 15 years. The first transaction, real world transaction, was on May the 22nd, 2010, when someone spent 10,000 Bitcoin buying 2 pizzas. Now, if you bring that forward to today, they are the world's most expensive food ever, because that is somewhere between $600 and $700 million worth of pizza. So I hope they were good. So you could say that, it was invented in 2009 with the issuance of the white paper. The first real world transaction was a year later.
Okay, and just to put things into perspective, from my very ignorant understanding, there are over 13,000 cryptocurrencies out there. Is Bitcoin the blue chip Bitcoin, the blue chip cryptocurrency of them all?
Right, the reality is I have no idea how many tokens and cryptocurrencies there are out there. Bitcoin is by far the daddy of them all. It is unique. We'll come on to talk about characteristics, and there are characteristics that make it totally unique to everything else out there. There are thousands and thousands of scams, pointless coins and tokens. There are, in reality, Bitcoin and 1 or 2 others, which I think will endure, survive, and on which the digital financial system will be built. And the rest, I'm just simply not interested in.
And why was it invented?
Well, that's a good question. And again, it comes back to, what's your motivation? Something that people get wrong is they think, Bitcoin was invented in one go. It wasn't. It took about 40 years of innovation. Really, since the start of the internet, they were trying to crack the the internet money phenomenon, if you like. It was created to give you a transaction currency, if you like, in the digital world. Okay. So there were small innovations over 40 years, which were all brought together by whoever Satoshi Nakamoto is. So there were 40 years of failure on digital currency, and then Bitcoin solved, well, I'm going to make a sweeping statement, has solved all the problems with digital money. Certainly all the known problems. There's no saying there isn't an unknown problem out there that we've not come across yet, but certainly looks like it has resolved the entire issue.
And so if we just move on to some of the features of Bitcoin.
Yeah.
Can I just start off with asking you, how many Bitcoins were created?
Right, so this is where Bitcoin this is why it's unique. It is hard-coded that there will only ever be 21 million Bitcoin. Each Bitcoin subdivides into sats, named after Satoshi Nakamoto. So each Bitcoin subdivides into 100 million sats. So there will only ever be 21 quadrillion sats. Sounds like a lot, but when you think how many, what's the global reserve currencies in pennies, it's a very, very big number, or cents, it's a huge number. So there's 21 million Bitcoin, which equates to 21 quadrillion sats, and that is hard-coded. That cannot be changed unless 51% of the owners of Bitcoin agree to it. Now, why would 51% of the owners of Bitcoin agree to it? Game theory comes into play here. Why would they agree to something to expand the supply which would make them worse off? Well, clearly they're not going to. I mean, I'm certainly not going to vote for something that's going to make me worse off. So the supply is known. There's a schedule of when this supply comes into being, and it is strictly limited. So unlike every other currency in the world, every other cryptocurrency in the world, no more of this can be created.
And how many of the 21 million have actually been, we're talking about mining in a minute.
Mined, yeah.
How many of them have actually been mined so far?
Just over 19.5 million have already come into existence, been mined.
Okay.
So there's another 1.5 million to be put into circulation, shall we say, through the mining process.
And that doesn't include the 1 million that...
That does include the 1 million. That includes everything. So the 19.5 is everything that's in existence. So Satoshi's million, all the ones that have been lost, and there are quite a lot that have been lost. There's a famous case in Wales of a man who threw his hard drive, his partner, or should I say his ex-partner, threw a hard drive away with, I think it was 8,000 Bitcoin on it. So there's a refuge tip outside Newport in Gwent, oh yes, with a black bag that's currently worth over $500 million in the refuge tip. It's quite famous, and you can Google it on the BBC website. You can see it, this story, and it's almost heartbreaking. So that's everything.
So we've got 21 million Bitcoin out there. 19 million.
No, you've got 19.5 out there, another 1.5 to come.
Okay. What's the total value today of all the Bitcoins that have been mined?
Right, well, so one thing we're going to talk about in a minute is volatility. Bitcoin is a very volatile asset, so you never know what the price is from 1 minute to the next because it does move around a lot. But currently it's worth between 1.3 and $1.4 trillion, which makes it either the 7th or 8th biggest single asset in the world, behind the US dollar, the euro, gold. I think silver is about the same size.
Goodness, so
Apple, Microsoft.
I'm just trying to think what's the total value of all the gold that's been mined is in the world. I think it's something like 10
I was going to say $10 trillion.
$10 trillion.
Yeah, and you've got to remember a lot of that never moves because it's in central banks.
Yeah.
And jewellery.
And the value of the total crypto world today?
I don't know.
Mm-hmm.
I don't care because I'm not interested in most of it.
Yeah.
I would guess Bitcoin is about 50% of the crypto universe. So I guess that the total universe is in the region of $3 trillion.
Right. That makes a lot of sense. Now, what you touched on the word volatility.
Yeah.
Now, you and I, when we work together, the global stock market has a volatility of 10, 12%. What does that mean? And what is the volatility of Bitcoin? So how does it compare to stock market volatility? Because I've seen stock markets fall 35% in a bear market.
So Bitcoin is very volatile. So if the S&P's got volatility of, I think it's about 15% at the moment, something like annualized volatility of 15%, Bitcoin would be 150%.
150%.
And there's ways of managing that volatility. We can talk about that in a bit. I mean, when you think I've lived through 3 bear markets in Bitcoin, in 2014 and 2015, it fell 73%. 2017, 2018, it fell 83%. 2021, 22, it fell 75%, I think. It gives you an idea of the magnitude of the volatility. But volatility is only one side of the argument. You've got to look at the returns. Because this is the best performing financial asset the world has ever seen. So if you did a Sharpe ratio on it for the technically minded out there, the number is huge. The return relative to the risk you're taking is monumental. Just don't get shaken out by the volatility. And I can absolutely guarantee, because I made this mistake, everyone who buys Bitcoin loses money on the first bear market. Because they buy too late in the bull market, then we get one of these monumental declines and they sell. And actually the reality is, as we know, people always sell when they should be buying.
Do you think there's any reasons? I mean, that's incredibly logical thinking, but a lot of people's psyche isn't robust enough to be able to cope with that volatility.
Yeah.
Will that volatility stabilise over time? Is there anything that can make the asset class, I hate to call it an asset class, but is there anything that can enable it to be less volatile in time?
So if you look at what causes the volatility, I think there's a number of factors. It's a very immature market. It's only 15 years old. 40 years old, but 15 years successfully been created. It's a highly controversial asset. It has been incredibly speculative. So people are in and out for minutes, seconds even. It can cause that level of volatility. There is effectively, up until today, been zero regulation of this asset, which has attracted the wrong sort of people. So it has been, the whole crypto universe has had a number of frauds, a number of scandals. Has attracted that sort of, should we call them investors? Now, there are developments happening now and have happened over the recent past, which are broadening out the number of participants in the market, the size of the participants, the experience and the technicalities of the participants. And we can touch on that. Certainly the development of ETFs in this space has brought a more institutional mindset to the sort of people who are buying it.
That's exchange-traded funds.
Exchange-traded funds. We'll come back to that because that's very important, what's happening there. So maybe this is wishful thinking, but I do think the volatility will lessen. And actually, as a function of the size of the price, I think it almost has to lessen. Because as the price gets bigger, I think the moves will get small. They'll get bigger in number terms, but smaller in percentage terms.
Just looking at the historic price of Bitcoin, it's now only back up to a previous all-time high, isn't it? It's not as if it's made a fortune for people that went in early, but for some people that went in at the wrong time a few years ago, it's only back up to those levels now, isn't it?
Yeah, we're back to where we were 3 years ago.
Yeah.
And just to give you an idea of the volatility involved, we're back to where we were, but in the last 18 months, we're up 430%. Because at the bottom of the last bear market, it was below $15,000 a Bitcoin. And recently we've touched $73,000. Now, on the point about all-time highs, I actually think the all-time high from the last cycle is completely misleading, because the last cycle was truncated by a scandal, the FTX scandal, and it was a fraud, out and out fraud. I think Bitcoin would have gone a lot further in that cycle had that fraud not happened. And I do think you would have seen the 100,000 plus Bitcoin price last cycle. So I wouldn't be put off by the price we've got today, because I think actually we're nowhere near what would have been the all-time high.
Okay. Let me just ask you about its correlation to other risky assets.
Yeah.
So when the stock market's historically, had a bear market, has Bitcoin had a bear market at the same time? I've never looked at it closely. So is it correlated to other risky assets, or has it got its own rhythm?
It's certainly got its own cycle, which does at times correlate to risk assets. I don't think the correlation is between risk assets and Bitcoin. I think the correlation is between what drives risk asset markets and what drives Bitcoin. So clearly, when you've got a currency that is limited in supply, and the central banking authorities decide to increase the supply of fiat money, things that are limited in supply are going to go up in value. So risk assets, the number of Apple shares in issue, become more valuable as the dollar gets devalued. Bitcoin becomes more valuable as the dollar gets devalued. So I don't think the correlation is between risk assets and Bitcoin. The correlation is between what's driving the two. Bitcoin also correlates to a number of other things, and this does make it not unique, but very, very similar to gold. Bitcoin has a very strong inverse correlation to crises. Get a crisis, Bitcoin tends to be a flight to safety asset. Bitcoin has a very strong correlation to political idiocy. When the politicians lose the plot, Bitcoin does well. And we can have a long conversation about that. But that is one of the reasons why I'm actually I'm not going to say bullish, but interested in Bitcoin, because the political world is in a mess. Bitcoin has a very strong correlation to economic incompetence, and we're in a world of drastic economic incompetence.
And I've always been worried about leverage. Over the years, leverage has normally been the killer application for investors losing money or paper money. Is there a lot of leverage involved in the crypto world, and particularly in Bitcoin?
There has been huge amounts of leverage. There always is far too much leverage at the top of the cycle. Currently, I don't think it's there. An awful lot of leverage got wiped out in the last cycle because of that FTX scandal, which, by the way, also wiped out a vast number of cryptocurrencies that were just shown to have no foundations. They just went to zero. I don't think it's hugely leveraged now. If I was to make a prediction, at the top of the next cycle, there'll be far too much leverage and people will get wiped out. The reality is, in the Bitcoin world, no one comes to rescue you. There is not a central bank put behind this. If you mess it up, you get wiped out.
Is Bitcoin intended to be some sort of inflation hedge by its originators, in the same way as a gold coin 2,000 years ago can buy the same number of loaves of bread as it can today?
I would argue on that a gold coin, with one caveat, can, as long as it hasn't been clipped or diluted in any way. Bitcoin cannot be clipped, cannot be diluted. You can't mix the gold with tungsten to create the same, in theory, the same thing. Bitcoin, because of its limited supply, is a hard currency. And hard currencies will always do well in an inflationary environment. So when the Bank of England come along and print 40% extra money supply in a lockdown scenario, Bitcoin is going to do well. Now, it won't correlate immediately with that money entering the system, but over time, it does tend to have an inflation hedge to it. It is a hard currency because of its limited supply.
Now, I'm not someone that naturally finds it easy to understand the digital world.
Yeah.
You've experienced that over many episodes.
I've experienced that 10 minutes ago with this camera.
And I don't think some of our audience, particularly the older members of our audience, are going to be able to understand what on earth Bitcoin is without understanding what Bitcoin mining is.
Right, okay.
Because it honestly feels like you're mining for bits of gold, and it's simply not true. Is
No.
it? So what is Bitcoin mining, and what are these miners doing?
Can we just take one step back? Because we've missed out the key to Bitcoin and why it's different to every other cryptocurrency. So we need to talk about that as a feature. Bitcoin is the only cryptocurrency and the only currency in the world, apart from gold, that is decentralized. It is an algorithm that is set in motion and cannot be stopped. There is no CEO, there is no CFO, there is no board of directors. No one can influence policy unless 51% of the holders of the coins get together. That isn't going to happen, and vote against their own interests. So you need to remember that this thing it cannot be messed with. There's no one to influence it. Every other cryptocurrency in the world, every other currency in the world can be influenced by people acting in the best interests of the populations or against the interests of the populations. There's also no one to sue if it goes wrong. So it is completely decentralized. No one can affect the policies here. Right, Bitcoin mining.
Yes.
The term mining, as you've highlighted, is completely misleading. You think mining, you think big hole in the ground, tunnels, massive machinery, digging stuff out, making metals, coal, whatever.
And liars standing over the top.
Yeah, exactly. We can't go that deep on this podcast today. This is intended as a sort of introduction, that's the word. But I searched the internet, and this is the best description, I'm going to read it, of Bitcoin mining. And I suggest, as with everything with crypto world, Bitcoin, you need to do your own research. But this was the best description of Bitcoin mining I could find, and it's only 46 words. Bitcoin runs on a decentralized computer network or distributed ledger that tracks transactions in cryptocurrency. When computers on the network verify and process transactions, new bitcoins are created or mined. These networked computers or miners process the transaction in exchange for a payment in Bitcoin. So in layman's terms, new Bitcoin are a reward to the miners, the computers, for processing transactions and securing the network.
Okay.
So that is mining. It's a whole load of techie people with computers spread all around the world. Decentralization again. It's not centered in New York, London, Paris. It's all around the world. There are thousands and tens of thousands of computers running this thing. If one falls over, one country has a power outage, doesn't matter. The rest pick it up and carry the work.
So, note to self, environmentally very unfriendly, but we'll come back.
We'll come back to that, because that is one of the big misconceptions of Bitcoin as well.
When will the last Bitcoin be mined?
So let's talk about the cycle of how Bitcoins are created. These miners, we'll keep calling them miners, are rewarded for processing blocks. So when transactions go across the Bitcoin network, they're done in roughly 10-minute blocks. So all your transactions are put into a block, and a new block 10 minutes later, and a new block 10 minutes later. And whoever secures and processes that block gets rewarded with Bitcoin. Every 210,000 blocks, so every 1% increase in the number of Bitcoins, you get what's known as a halving. The reward is halved in size.
For the miners?
For the miners.
So they get paid less
they get paid less Bitcoin, but it depends what the price of Bitcoin has done
For doing the same amount of work.
doing the same amount of work, which is critical. 210,000 blocks times 10 minutes equates to roughly 4 years. So every 4 years, you get a halving cycle. So today, sat here today, there's about 900 Bitcoin a day being created. In about 40 days' time, we hit a halving. So the daily reward for the entire of this decentralized computer network halves to 450. So if you do the math, the last Bitcoin will be created in 2140.
Okay.
The 21 million will be mined and issued in 2140.
Okay, that is a lot to take on board.
Yeah, sorry, it's, yeah.
And does the halving drive up the price of Bitcoin in the short term or in the long term as well?
Both. But you do tend to get a spike in the price for about 9 to 18 months after the halving. Now, what's interesting in this cycle, as I've already alluded to, is we've had a spike in the price in the last 18 months before the halving. And I think that's evidence of the nature of this asset changing, the nature of people getting involved. Certainly the influence of these ETFs, which we're going to come back to, being launched pre-halving,
Yes.
has affected this cyclical nature of the business. Now, it will still be there, but I think it's changing.
It's because I saw the other day, I think that BlackRock have got something like $20 billion has come into their Bitcoin ETF.
So BlackRock have already bought, so we're talking only in the last 2 months, 200,000 Bitcoin, in excess of 200,000 Bitcoin for their US resident clients via an ETF. That is 1% of the total market of Bitcoin, and they bought it in 2 months.
So isn't there a risk that actually it's better to travel than to arrive, and that for people listening thinking about going into Bitcoin, that actually they've already seen this massive hike up in the Bitcoin price and it may not go any further?
I've been saying that for 10 years, from a much lower price than we are today. I mean, the reality is you have a new huge source of demand for Bitcoin, these exchange traded funds, people who've never been able to invest in this before. And we'll come back to the motivations of why people invest or use Bitcoin in a bit. But supply is known. This is the only asset in the world where you know the supply. So in any asset, you've got to analyse supply and demand. Well, you know the supply in this, it's certain. It's in the algorithm. All you've got to work out is demand. And what we know is there is a vast number of people who now can get involved. So fixed supply, demand unknown, but that network potentially could broaden out.
So why did the US regulator allow the ETFs to come to come to fruition?
That is the best question you've asked so far, Alge, and I cannot answer that, because if I was a US regulator with agendas, there is no way on this earth I would have allowed those ETFs. So let's look at the ETFs now. We'll come back to the environment and things like that. There have always been ETFs since not the start, but since about, I think, 2014, there have been ETFs in existence, but they've been based on futures, Bitcoin futures, which are traded on the Chicago Mercantile Exchange. There's a cost to futures.
Mm-hmm.
They cost about 2% a month. So it's the futures-based ETFs have never tracked the Bitcoin price. What was new this year is they allowed 10 new spot ETFs. So these ETFs have to buy the physical, I'm using the word physical, but they actually have to buy the Bitcoin. It's not a future. So there is demand now for the underlying asset. Why they allowed it, I can only think it was pressure from investors, asset management companies, this because this thing has grown up, it's proven itself. I mean, when I first started looking at this, I thought it was very interesting, but I thought there's a 1% chance it works and a 99% chance it's a fraud. I would actually say now, I would flip that on its head. There is still a chance that Bitcoin goes to zero. It's a very small chance compared to the potential upside, but the whole thing has turned over on its head. And if you look at what I've just said, what you have is the perfect asymmetric trade. There's a small probability you're going to zero, so you lose 100% of your money, but there's a larger probability this thing's going to a very big price. And I have no idea what that very big price is.
Wow. Well, you heard it.
That's not advice, by the way. I reserve the right to change my mind on that.
I'll grant you that one. Environmentally, I've always been under the impression that it takes an enormous amount of computer power to do the mining of the bitcoins, and that therefore it's a very ungreen investment. What is your response to that?
So that is a story that's sown in the media by compromised leaders, if you like, hypocrites flying to Davos in their private jets. They love to tell us what's green and what's not green and ignore what they're doing. Undoubtedly true that Bitcoin uses a huge amount of electricity. But you've got to look at how people are now generating that electricity. And I'll give you 2 or 3 examples. And what I will say is I think Bitcoin mining uses less electricity than, for instance, AI, which is everyone's favourite thing at the moment. No one's saying that's a danger to the environment. Data centres use vast amounts of electricity. No one's criticising those. So it depends what your agenda is. Miners today, and these, if you don't know what a miner looks like, you want to Google it. They are amazing operations. These are warehouses full of ASICs machines, very high power computers. They are co-locating themselves next to energy resources. Now, why would you do that? Well, if you take an area like Texas, which is a centre of Bitcoin mining, when the Americans in Texas drill oil out of the ground, they also get natural gas. And there's no use for this natural gas. It's too expensive to pipe it out to the coast and send it to Europe. So they flare it. They effectively burn the gas and create carbon in the atmosphere. What miners are now doing is capturing the gas, using that to create electricity to run their Bitcoin mining machines. So you're taking a resource that would naturally be wasted because it's uncommercial and converting it to monetizing that waste. That's just Texas. If you look at, we'll use Texas again actually as an example. This is really technical, but if you look at grid stabilization, now I didn't think 10 years ago I'd end up looking at electricity grids and how they work. Grids are being expanded just on the back of Bitcoin mining. Because if you're a grid operator and you know you've got a cornerstone client who's mining Bitcoin, needs a lot of electricity, you're prepared to expand your network just for that person, your grid. But on the understanding that when the residents of an area need more electricity, the Bitcoin miner shuts down. So what the Bitcoin miners are doing are enabling grid operators to stabilise their grids, expand their grids, because it's now commercially viable for the electricity companies to do this. Now, in the UK, we won't understand that, but in America, when you look at the disparate nature of their electricity grid, that has been an amazing development. It's helping the residents of an area to get more reliable electricity.
Okay.
And if you go on the last thing I mentioned about energy, and if you remember back to our days, I love the energy markets. If you go to northern Canada, there are energy resources that are trapped. It's not commercially viable to get the energy out of northern Canada. What you're finding now is Bitcoin miners are putting themselves next to the trapped energy. Someone's drilling it out of the ground and they're using it to monetize trapped resources, because you can take your trapped energy, convert it to a financial asset, which can be traded anywhere in the world. So that's some arguments for and against, I guess, the environment thing. I actually think personally, one of the things that's going to fall apart over the next 5 years is man-made climate change. Ultimately, I think people will realise we don't have an impact, or there's so much of an impact on the environment. Controversial, I know, but it's another thing I've spent a lot of time looking at. So I think it's what you call in the Bitcoin space FUD, fear, uncertainty and doubt. Anything to sow doubt in the mind of investors of this asset.
Can we move on from that fascinating example of how the world of Bitcoin has evolved into the use of Bitcoin? Because talking about FUD, I'm the typical example of someone who's been brought up in the last 10 years to think that Bitcoin is used by criminals, it's used for money laundering, it's got no legal use, and all we're doing for those people that buy Bitcoin is supporting illegal networks.
So there isn't a currency in the world that is not used by criminals. And I would suggest that the most used currency in the world by criminals is the US dollar, purely because of the distribution of dollars around the world and the size of the American economy. Actually, digital currencies, all of them, certainly Bitcoin, is not a great medium of exchange for criminals, because you have an open source ledger that shows you every movement of the currency. So if the authorities can work out who owns what wallets, they then know who's moving currency around. So as soon as they know who owns a wallet, it's fully transparent. Now, there are ways of hiding it, but if you're worried about ever being caught as a criminal, you don't use Bitcoin because it's there on the computer network. And if you get rumbled, you're toast. The evidence is there, cannot be erased.
Good point.
Uses of Bitcoin. Now, I think I found 13. I found 12. One's a bit tongue-in-cheek. It is digital money.
Mm-hmm.
It is used already. Certainly in emerging markets, it's used a lot. It is legal tender in El Salvador. And if you're not aware of the revolution in El Salvador, it's something worthy of looking at. They have a youthful, entrepreneurial president who has completely turned that country around, a guy called Nayib Bukele. One of the first things he did when he came into power was legalise Bitcoin as legal tender. It is known that there are a number of other countries who are certainly looking at Bitcoin and what it can do for their populations. So if you look at what Bitcoin can do, and this will touch on some of the other uses, go back a couple of weeks, Egypt devalued the Egyptian pound by 20%. The currency actually fell by 50%. So they put in a legal devaluation, and of course everything goes a lot further.
But the
market took it down 50%. If you were Egyptian resident in downtown Cairo and you owned Bitcoin, the value of your Bitcoin in Egyptian pound just doubled. That is the perfect hedge against, as I was saying earlier, economic incompetency, devaluing currencies. It is a payment network, so it is faster and more secure than anything like Visa or MasterCard.
And there's no taking 1.5-2% from the vendor.
There will be fees, but they will be much lower. That I could send you Bitcoin now if you had a wallet, fee free. But if you're using a third party, there will be fees. But as far as I'm aware, they are much lower than the established banks and providers. We've touched on digital gold. It is digital gold, but a lot more volatile. Gold moves. A 1% move in gold in a day is massive, unless it's in Egyptian pounds, because obviously gold would have gone up as well. But a 1% move in gold in sterling is a big move. Well, Bitcoin does that in 2 seconds and can do. Some people see Bitcoin as a commodity. And it is interesting that actually the futures are traded on the commodity exchanges in Chicago. Inflation hedge we've touched on, it's not a CPI hedge or an RPI hedge. It's a true inflation hedge. It's a hedge against the creation of money by central authorities. It's definitely a speculative asset. There's a lot of people own it because price go up and they sell when price go down. Something people haven't got their head around yet. This thing, and it's not happening yet, but I think it probably will within the next decade, it is pristine collateral for loaning. Now, when you think probably the biggest financial mistake I have seen, certainly in my career and studying the history of financial markets, was made by the Americans when they sanctioned the Russian-owned US Treasury bonds and then took them away from Russia. That is a massive mistake that happened 2 years ago on the invasion of Ukraine. It has sent a message to everyone who owns US Treasury bonds that you cannot trust the American authorities. And Bitcoin, completely decentralized, no one controls it, I think ultimately will be a replacement for the US Treasury market as collateral. It's a hedge against collapse. I do wonder, because the hedging capacity, the inflation hedging side of it, I wouldn't mind betting that in the next decade you will see bond portfolios using it as a hedge for their bonds, because bonds are obviously massively affected by inflation.
Yeah.
And I do think there's an interesting mix here. There's a product of who puts Bitcoin and bonds together. I think that could be really interesting. I'm amazed bond portfolios have never bought gold, to be honest, as a hedge, but they haven't. I've already mentioned it's a way of monetizing trapped energy. It's an electrical grid stabilization tool. It's insurance. Those guys in downtown Cairo insured their personal wealth against the currency collapse.
So when Charlie Munger famously said when he was asked what's
the late Charlie Munger,
who had the ability to say an awful lot with very few words, and he was asked whether he preferred Tesla or Bitcoin, and he said that's like comparing a louse with a flea.
Yeah.
Neither of which you want to have the company of.
Yeah.
Do you think he was just of a different generation, or do you think that it just is it was outside of Berkshire Hathaway's remit of how money should be treated?
Let's be generous and say it was because of from a different generation. Brings me to my last, and this is slightly tongue-in-cheek, but Bitcoin is a monumental pain in the arse to the establishment, of which I would class Berkshire Hathaway as a cornerstone of the establishment.
Yes, they are. I mean, it's that they are there for the good of America.
Yeah, this thing is completely decentralized. No one can control it. No one can manipulate it. Therefore, it absolutely represents financial freedom, sovereignty. And there are definitely forces in the world today that don't like that. The establishment do not like that.
I totally get your point. We now need to move on to valuation. How on earth does an individual work out when is a good time if they were to venture down the road of cryptocurrency, and then deciding that of all the cryptocurrencies, the one that stacks up the best for them is Bitcoin, for many of the reasons which you have given this morning.
Yeah.
How can they work out when is the right time to buy? Is there any way that you can do fundamental valuation analysis that supports a decision of when to buy and when to sell?
So this is definitely not advice, but I'll tell you how I look at it. There are loads of ways of looking at this. Most people value it using technical analysis, which to me is voodoo science. And actually, I think is probably less relevant than it was, because this asset is definitely changing because of the ETF demand and new flows in. The concept that is difficult to get your head around is what you are buying is a space on a network. You're buying 3,000 lines of code, effectively. So you're buying space on a network that someone else will want. And it depends how many someone else's there are that defines the price of your space if you want to sell it. The only way that is going to make sense is to go away, and I'll give you some resources at the end that I found useful that people might want to refer to. That's the only way to make sense, is just to learn about this thing and understand network effects. There is a minimum price for Bitcoin, which is the way I always think about it. So we've already mentioned the colossal amount of energy it takes to create one Bitcoin, and it is a lot of energy. The Bitcoin that I may or may not own today are not worth the energy that was expended on creating my Bitcoin. It's the energy it would take to create one Bitcoin today. So the minimum price for a Bitcoin is the energy it takes to create it. There's a floor price to it. Now, of course, that price moves, but it does.
And what is that roughly in 2024?
Don't know, but I'm going to say $45,000 a coin.
Okay.
Roughly, and it could be 50, it could be 35.
Okay.
It moves, but it does give you a sort of a minimum NAV.
Yeah.
Is the price of energy to create the next one.
It's absolutely fascinating.
And that's what I always keep in my mind is, and the price, you need to understand how Bitcoin works. If the price goes up, it attracts more miners who are looking for that reward. The more miners that come into the space, there's a thing called the difficulty adjustment, the difficulty factor. So within the algorithm, it gets harder to mine. So what it stops is oversupply of Bitcoin, if you like. This difficulty factor keeps the supply to the 10-minute blocks. So the more miners you've got in the space, the more electricity it takes, keeps the price up.
Yeah. What are the problems of owning Bitcoin? Because I've heard stories of, when you told me the story about this poor person in Gwent who's
lost
8,000
Yeah.
Bitcoin, but it can be, Bitcoin can be stolen, and there are all sorts of fraudsters out there. How does somebody hold Bitcoin safely?
Right, this is a self-sovereign asset. So if you went back 200 years, all assets were bearer bonds or bearer instruments.
Yeah.
You were responsible for them. If you had the certificate, you were responsible for it. Same with Bitcoin. So I think there's 5 ways, probably 5, there might be more, 5 ways of getting involved in Bitcoin, and they all have problems. The safest way is to buy the Bitcoin on an exchange and download them onto a hardware wallet, a cold storage wallet that you have. Very difficult to do, very technical. Don't suggest you do that, Alge.
Oh.
That would be dangerous. You can buy the Bitcoin and keep them on an exchange. Now, there are some very reputable exchanges out there. There are some that are not. FTX, I've mentioned, was not. It was a fraud. You could buy, there are definitely ETFs out there, again, exchange traded funds, that invest in the picks and shovel makers for the sector. That's one way of playing it. Slightly less volatile than the actual Bitcoin, but you're buying companies, and they are regulated products, the ETFs. You could buy MicroStrategy, which is a company that has a bucket load. I think it's 205,000 Bitcoin on its balance sheet, but that trades at a premium to the value of the Bitcoin, so you're paying too much for those Bitcoin. But it is the best way to own it is cold storage or on an exchange, but that's not advice. The difficulty with buying Bitcoin is the traditional financial system does not like it. It is a massive threat to their fiefdom, if you like, and try getting money out of the UK banks onto a Bitcoin or a cryptocurrency exchange. You have to run the gauntlet of the banks, and it's difficult to do. They don't want you doing it. You can't buy this on traditional platforms in the UK at the moment. Now, that will change in time. That has to change.
And has Bitcoin got any real competitors out there?
Personally, my own opinion, I would say no, because of the decentralized nature of it. There are some other cryptocurrencies which are incredibly interesting, on which a completely parallel financial system is being built. And the two I would mention there, Ethereum is very interesting. Solana is very interesting. There are other cryptocurrencies, but they are different. Okay. They're not comparable.
Let's not go into those today.
No.
And have you got any recommendations for people who want to learn more about what we've been talking about today? Sources of information, books you've read, anything that can help people gather information to make their own judgments on the asset class?
Okay, so I think to fully understand what this asset is, you need to have a good grasp of financial history, a very good grasp. And I'll give you two books that you should read to get your head around that. The first is The Creature from Jekyll Island. Don't know if you've ever heard of this book.
No.
By an author called G. Edward Griffin. Now, Edward Griffin is 92 years old now. This book is about the creation of the Federal Reserve Bank of New York and how and why that was created. Once you've read that, you'll understand the problems within the current financial system. If you then combine that with a book called Tragedy and Hope by a guy called Carroll Quigley, you'll understand a lot about what has happened, certainly over the last 20 or 30 years, across the whole world, and especially in the financial sector. Now, The Creature from Jekyll Island is about 300 pages long. It's quite an easy read. It's very entertaining. Tragedy and Hope is 1,300 pages long. It's a real tome. The good news is there's a cheap version of it by a bloke called Joseph Plummer. So he wrote Tragedy and Hope 101, and that's actually available in an ebook.
More my sort of.
And that's only 5 hours long, and it touches on all the relevant points of Tragedy and Hope. Combine those two books together, and an awful lot of what has happened over the last 30 years will be explained to you.
Yeah.
And will explain to you why having some assets outside the traditional financial system is probably a clever thing to do. And by the way, just a plug for a friend of mine, I don't know how he did it, but a guy called Ahmed Malik, who runs a podcast called Doc Malik, actually interviewed G. Edward Griffin about 3 or 4 months ago. God knows how he got him on there to explain the book and why he'd written it. It's a great listen. 2-hour podcast. Great.
And what's the podcast called?
Doc Malik.
Doc Malik.
Doc Malik. He's a fascinating guy. Him and Edward Griffin is fascinating as well. And put the two together. Really good read. There's a third book. If you want to understand why the world is going crazy at the moment, there's a book called 180 Degrees by Fergus O'Connor Greenwood. That is worth reading. Now, I am going to say to anyone who's listening, it's not for the faint-hearted, but it does add to the understanding of what's going on in the world. Really, it is questioning, do governments have your and my interests at heart, or are they working for different agendas? And you can see how Bitcoin plays on that. So that's 3 books to read. If you're thinking of this area, you definitely want to read the Bitcoin White Paper by Satoshi Nakamoto. It's 9 pages long, and it explains Bitcoin. It was his white paper, his understanding of what he had created. And it's 9 pages, freely available on the internet. And then the one you really want to read to understand Bitcoin and how it fits in is The Bitcoin Standard by Saifedean and Moose. That is the Bible for the sector. If reading is not your thing, there's a Bedford-based group of guys who run a podcast called What Bitcoin Did. It is entertaining, informative, hilarious, heartbreaking. A guy called Peter McCormack leads that team. It is brilliant as a resource for understanding Bitcoin. They've done about 900 episodes. of those 900, I think I only understood about 450. But if you pick the basic ones first, go back to the early days, they've been going about 5 or 6 years now. Pick the early ones, you'll learn as you go along.
Pete, absolutely legendary. It's been an absolute pleasure to have you on my podcast and glean so much information about an asset class I've got zero knowledge of. A little bit more today, but you've given me a massively long reading list. I think you've got one more thing to tell me.
I've got a couple more things to leave you with.
Go on.
Once you've done all your research on Bitcoin, you will understand one thing. Bitcoin has not appreciated in value since it was launched. It's just everything else is hyperinflated against it. 1 Bitcoin is still worth 1 Bitcoin. Now that will be complete voodoo to you at the moment, but if you read those books and you get your head around Bitcoin, you'll understand what I'm saying there. The second thing I would say is, as a market professional, the last thing I'll say, and I think anyone who is a market professional listening to this needs to understand this. For the past 15 years, you've lived in a world where you could dismiss Bitcoin as a fraud. I don't need to understand it.
Yeah.
I think from the launch of those ETFs, it is now your fiduciary duty, if you're running institutional money, to understand why you don't own it, and if you don't own it, to explain it to your clients why you don't own it. Because I think that's a massive change. And personally, I wouldn't buy a managed fund unless they'd at least considered this asset. They don't have to buy it, but I want to know why they're not owning it.
Despite its volatility.
Despite its volatility, because the way I said we touch on that, the way you control the volatility is twofold. Position size is key. As with any volatile asset, you don't want to bet the ranch on it. Your position size has got to be just big enough that you can cope with the vol. And the second way you control the volatility is not to look at the price. Because if you look at the price on a daily basis, you will bounce yourself out of it. And I know that because I did that in the first session.
Pete, absolutely fantastic.
Always a pleasure, never a chore.
Great to see you.
All content on the Algaes Investment Podcast is for your general information and use only, and is not intended to address your particular requirements. In particular, the content does not constitute any form of advice, recommendation, representation, endorsement, or arrangement, and is not intended to be relied upon by users in making or refraining from making any specific investment or other decisions. Guests and presenters may have positions in any of the investments discussed.